Bang, and we are back. Next is a VC panel talking about the evolution of crypto VC investments. Here to introduce the panel and moderate this one is Zia Word. Zia, the panel is all yours. Take it away.
Hi, guys. Thanks so much for joining us for this panel. We will for sure have a lot to talk about. The space is pretty wild right now. So I want to kind of introduce my panel and then we'll kind of dig right into it and get chatting about what's happening. So first of all, we've got John Cole. He is from Galaxy Digital, who many of you may know is one of the biggest VCs in the space. We also have Mark Caccia from Scytale, who are early investors in Polkadot and Ocean Protocol. And then we've got Jalak from Future Perfect Ventures. So I'd love to kind of hand over to you guys to do your own sort of mini intros, and then we'll jump right in and start the panel. So over to you, John.
Great. Well, thank you, Zia. So I'm at Galaxy, where my partner and I run the firm's investment team. I've been doing this for a few years now professionally. Before that, was a hobbyist, got into crypto as a miner, which was a huge mistake, but I keep my first GPU as a little souvenir. I imagine the course of the panel will talk a lot more about how we think about investing. So I'll, spare that for later, and I'll let Mark take it from here.
Hi, well, thanks, Jonathan. Yeah, so we've been running blockchain VC since 2017. My background is in hedge funds. So I actually invested in Mike Novogratz's fund way back when he was still doing that, or at least, way back when. And we approached it a little bit differently than many, in that we wanted to invest in the business cases more than crypto. And then we ended up investing in business cases that had tokens, and I think, so I'll leave the rest for the conversation.
Hi, I'm Jalak Jobanputra, founder of Future Perfect Ventures. It's a fund that I launched in 2014 to invest in decentralized technology. I've been a VC since '99. I was at Intel Capital out in the Valley. And after I went to my first Bitcoin conference in 2013, I just became really excited about the potential of crypto to help create new business models. And so we're currently investing out of our third fund.
Awesome. Thanks a lot, guys. So first of all, I kind of want to talk about the general market conditions, and I touched on it a little bit in the intro. There's a lot of money sort of floating around the market right now, and we're seeing lots of different vehicles crop up, which I'll get into later. But I know a few, and you've mentioned in your intros there that a few of you from kind of traditional venture capital or hedge funds. What, in your opinion, are, I guess, the major differences in your approach when you invest in Web3 or tokenized assets? I'll over to you, Jalak, first.
Sure. So we have kind of evolved with the market from our first fund through our current fund right now. When we launched FPV in 2014, ETH was about to ICO. I was a personal investor in Bitcoin. But became really excited, as I said, about the underlying technology and then the infrastructure that would have to be built out around tokenization. So our early investments were companies like BlockDown.com, which is one of the largest crypto wallets in the world, based in the UK, Abra, BitPesa, which is now called Aza, focused on currency conversion using blockchain technology in Africa. So these were a lot of either infrastructure companies, Blockstream is another one, or companies where I saw first use cases such as BitPesa. Now, with the second fund, we started taking more token exposure since there was more regulatory clarity. We did an SPV to do DOT in 2017 in their first round. We've more recently done the Graph protocol, which is that what I consider like the meat and middleware. So and we continue to do equity. So I think we're now getting into where we're going to see the creation of new business models across sectors and finance as well as media. We've seen that with NFTs, and so we like to be flexible in the way we invest. Traditional VC is very much ownership driven, and I think the opportunity around crypto and particularly around tokens is going to really change the VC industry and the way VCs invest. And so I think that's exciting to be a part of that process and work with other funds that are thinking more creatively about how to fund these projects.
Yeah, awesome. And Mark, you mentioned that you kind of think about things a bit differently. You sort of you look at the business cases, but that just so happens to have a sort of tokenized aspect to them. So I'd love to hear a little bit more about that, and I guess your approach to that.
Thanks. Yeah, so we learned a lot with the first fund as well, the difference between token and equity investments. And as we're liquidating Fund 1 now and about to launch Fund 2, we've been researching and pre-funding a couple of investments, and equity versus token. So from the beginning, we always try to look for a fundamental value creation proposition and see how that can be captured in whichever asset that we're investing in. And we saw in practice, when things that had a token had a tough time, the token could survive. But when you invest in an equity and it has a tough time, they need to raise more capital or they don't survive. And so that's just a sort of very simple kind of argument for being more of a token investor. And, so given that we're investing in a pretty new space, it's a little bit more challenging, or at least was challenging for me being a first-time fund manager, to raise longer, like pure venture type money, like a 12-year fund. We started with a 5-year fund, and we're liquidating after 3.5 years up, a very nice return. And Fund 2 will also be, a 5-year fund. And so, to have an eye on liquidity, but investing in early stage, a token is very useful for that as well. And so sort of, if I was to boil it down into a nutshell, if we can have the fundamental sort of eye to value creation and value capture and have that as a backstop for the valuations where we invest, and then we can hopefully take advantage of cycles like we're experiencing right now where everything goes up, but like in ways that it's just very hard to understand.
I'm glad you said that it's very hard to understand. That's very frank coming from a VC. I love that. John, just before I believe Santiago's joined us, but just before I intro Santiago, John, obviously you mentioned you kind of came from a mining background, and so it wasn't necessarily traditional VC. And so I'd love to hear about your kind of lens on things and what brought you to doing what you're doing, and how, and if you think that your background maybe gives you a different kind of approach or view.
Yeah, I was a hobbyist miner, but I was a professional bond trader at Morgan Stanley, and all that taught me is how fucked the current rails are. And big thing we're trying to do here is build better rails. I want to build a financial system that I'm proud to be a part of. It was not the case, and I'm sure everyone here in the audience that's ever tried to do a bank wire wants to file assault charges against their banks as soon as that's complete, because it's such an egregious act, especially after you transfer some stablecoins. But I'll tell you, I think the main difference in operating in this space as an investor is just that the definition of what it means to be an investor in crypto, it's not a one-to-one mapping from the old world's definition, right? Because these assets are not pieces of paper that sit there, they're alive, right? The things that we can do with one of the assets that we purchased from the teams that we backed very early on, it's a, again, it's a living, breathing things that we can do so many other things with, as opposed to just something that sits either like on some database and never moves, right? If you think of most assets that traditional venture investors and other investors invest in, the only times you interact with the actual asset is when you purchase it, it moves hands, and then when you sell it, it moves hands. In between, it does nothing. Versus these assets right now, we're talking about at the most basic level, voting for a governance change, but then there's using it as collateral, using the collateral from the collateral as collateral, right? The DeFi, we at our team, we talk about DeFi as a collateral machine. So the entire landscape is different. The way that a team can leverage their treasury is very different, because in the traditional world, right, you spend 7-8 years with an illiquid asset, and then every few years you engage in price discovery as you fundraise. It takes months, right? Meanwhile, here, most of these teams have a liquid treasury that is priced by the market at all times, and that. So I really can't tell you. I mean, I really think it's so different across the board. So the background in mining has given some insight into the operating part of this difference. Like, oh wait, when you're touching assets through mining, you're performing an activity for the sake of the network, and that's how the rest of DeFi really operates. We're doing stuff for our networks.
Yeah, and actually, I'd love to kind of dig into that a little bit more further down the discussion, because I know there's a couple of different, maybe slightly differing views on the panel about the value of some of these, I guess, mechanisms in DeFi, and so I'd love to kind of dig into that. But before we kind of get into that, I'd want to just introduce Santiago Santos from Parify. And Santi, if you could just introduce yourself and give a little bit of your background, that would be fantastic.
Yeah, great. Hey, everyone. I won't be boring, I guess, but yeah, quick background. I'm a Parify Capital. We're a DeFi focused fund, and so we started investing. My partner Ben and I come from traditional finance world, and for us, it felt like the thesis that we started making early on was that blockchains are very well suited to disrupt the financial services industry. And similar to John's point, I think everyone can sympathize that just finance is a very broken experience, especially when you go overseas. Most Americans probably think that Venmo works everywhere, and it doesn't. But just from that standpoint, we've been early supporters of a lot of the DeFi networks that have come to life, and I guess very perhaps uniquely different from some other funds. We take a very active approach to investing. Not in like the barbarians at the gate, type of style for private equity, but more so staking, providing liquidity, being active in governance. And so that's our approach, how we think about aligning ourselves with really good teams and founders in DeFi that, as John also said, are not just porting over existing primitives in the financial world, but also creating new ones like flash loans, and through composability, just adding a whole new dimension of things that can be possible by piecing together these money Legos.
Fantastic, thanks, Santi. So we spoke a little bit about how fast-paced the industry is at the moment. So I want to, I guess, ask you, and it's kind of something that I think about every day. It's like, how do you keep up with everything that goes on in this industry on a day-to-day basis? And how do you, I guess, make those decisions quickly and effectively so that you're staying ahead and you're actually staying relevant in the space? And that's to anybody that wants to take it. Go ahead, please. It's open discussion.
I think the first way you keep up with it is understanding that you can't, and you get a team that you have high conviction in their ability to support you, and you supporting them. But it's really a losing game to try and keep up with everything. And so, some of the things that we do is we're understanding that, like, hey, if we try and chase everything, we will fail, because the pace of innovation in this, it's unbelievable, because the time to get started is, the barrier to entry is nil. the fact that anyone can come off and pick up parts off the shelf and just get started means that every day there's going to be something new. And so for us, it's more about focusing on where are the ideas where they're not just like a next step forward, but they're like a step change. And so, you'll see people going from, so Compound gave us, the magic of instant variable rate, variable term loans. So now the next logical step for many is, we should make those fixed term, fixed rate. Great. That's amazing. That's undoubtedly going to happen, but that's not where we in particular want to spend most of our time, because anywhere where it's like the not logical next progression step, other people will get to as well. It's going to get crowded. So we narrow our focus to more bigger step change type of events. And so that's what we're doing to try and keep up with it, because it's too much. I've never been in anything like crypto where you take a 2-week break and you need to relearn so many things. It's unheard of.
Yeah, I definitely agree with that. I think sometimes even a day break and you have to step back in and learn what's happening. But yeah, has anybody else got a kind of take on that, or a different approach to that?
Well, I would add, you said how to make quick decisions. I don't make quick decisions. I think what in venture, you're afforded there's no luxury. But if you're making very fast decisions and you're not doing it right, because any investment that we make has to be very carefully considered, because we're in it for the long term. It's not like a trading where I say, okay, I'm going to jump into this. It looks interesting. Then I'm going to do my research and I'll set a stop loss in the meantime. It's a very different type of discipline. And I would agree, with what Jonathan said about not being able to keep up with everything. And it's as it grows, and it's like saying, okay, I invest in the internet. You can't keep up with everything that's being built on the internet, because you just can't keep up with everything. We have the benefit of being rather narrow in our investment approach, so we're not investing in everything that comes up. So as we're not doing DeFi, for example. A lot of people doing DeFi. It's very, very exciting, to have, collateral on collateral, and leverage upon leverage upon leverage. But it's hard for me, and maybe somebody can help me out here on the panel. It's hard for me to see where there's always fundamental value creation. To me, it rhymes a lot with things I've seen in traditional finance of putting leverage upon leverage upon leverage, and the thing at the bottom, which is supposed to be valuable, may not really have the value, but you don't really see it because there's 3 layers in between. Who wants to go for it?
I'd actually love to open that up. I'd love to open that up to the guy, because this is what you and I know each other, Mark. So I know this is, what your opinion. And I know Santi's very into DeFi, and also John. So I don't know as much about Jalak, if you're into DeFi as well, or whether you kind of stay away from that. But I'd love to kind of open this up and kind of see what you guys have to say to Mark's point there.
Yeah, I think it's a great point. I mean, I think this idea, if I understood correctly, the stack risk, right? Which is, there's 2 components of DeFi. One, it's perfectly transparent in some capacity, and to John's point, you're able to see all the transactions in real time. Like these protocols are designed to be not insolvent. Like they can't be insolvent by design, right? Maker, Aave, Compound. I mean, these protocols execute a certain logic, right? If collateralization falls below X, you liquidate, and then therefore, i.e., the protocol is okay. You can't say that necessarily about your bank in traditional world, right? You don't understand what kind of investment policies and what type of risk and the exposure that they have. And I think people learned that the hard lesson in 2008, where you had no idea, no semblance of how overexposed they were to mortgages and the assumptions that they were making on the correlation of housing prices. So that's the traditional world. But there is an argument in DeFi, which is through composability, you have this stacked risk, right? If protocols are interacting with each other, and I think we've all seen the web, Maker interacting with Compound and Sushi and Uniswap, there's just a web of connectivity in this space, which on one end is great, right? Because you get all these added benefits that you otherwise wouldn't have, right? You can be both a liquidity provider earning fees, but also you can use those liquidity shares and borrow against them. And And so it creates these new primitives that are pretty interesting from a capital efficiency standpoint. But the criticism to that, and we've seen in some capacity, is that you're only as strong as your weakest link, right? I mean, there's no surprise. There's very little. There's relatively little Lindy in DeFi, meaning, you have very limited standards, and there's a lot of innovation. But if a protocol breaks in that chain, in that connectivity, then it can pose a systemic risk to DeFi. And so I think about that a lot. It's probably one of the areas in DeFi that needs the most improving. We need better insurance and risk management and sort of guardrails to prevent a too big to fail event. Because if one really big protocol were to fall, then it could have a very cascading effect across DeFi. And I don't think it would be a fun event for any of us. So I don't know if anyone would add to that.
And just to add to some of the things Santi's saying, the stacking risk in DeFi actually is not even just in the financial realm, right? In terms of like asset prices and collateral being used, there's a lot of borrowing of contracts, right? So certain contracts, once they've been out for a while, they kind of become ubiquitous. Anyone else can come and leverage those and use them in their own protocol. Like maybe, they fork it and they do a little bit of modification, sometimes none. And so you can imagine if a contract that has been around for a long time is perceived to be completely safe, if that were not to be the case, that is the risk I'm most concerned with. Now, to the point again on Mark's point of the collateral, the main difference here is that, so we used to sell mortgage bonds, and those things are hot pieces of garbage. And, at the end of a month, they would settle on the 30th of the month. Even though I'd sell it on the 13th, it settles on the 30th. Why? Because they're waiting for all the payments to come in. There's, there's like a chain of papers that involves people calling other people and figuring out and like exchanging documents to figure out who at the end of the day is sending the check to fund this thing. This is not how DeFi works. All of those things are inextricably linked. When my collateral goes 7 steps down and is used in 7 different places, I can unwind all of that in a single action. There's this very, very strong linkage and a lot of transparency that just doesn't exist in the traditional financial system, which was built for a paper world, right? So everything that we know on Wall Street was originally built to deal with paper system. It was built for a world where, one of the old colleagues I had used to talk about how one day a container full of bonds fell down the elevator shaft. $400 million worth of bonds fell down an elevator shaft and had to be recovered, right? So that's Wall Street of today is built, that's its roots. And everything with the foundation was a paper system and everything just kept stacking on top of it. There was never a whole cloth reconstruction of the system. This is the first real earnest attempt of that. And that's why things are so different, right? And so I share Santi's concern. I definitely there is some systemic risk in it, except it's so much easier to unwind, any complex action. Whereas on Wall Street, we'd have to call the next bank and the next bank and the next bank and the next bank and the next bank to hopefully maybe arrive at whomever it is that's at the end of that chain that's actually sending the payment that is at the end of the line of some complex, packaged security.
Yeah, I think that's really interesting because I think, you both kind of almost validated and invalidated some of the things that Mark was saying, and I think that's probably, indicative of where we're at with it. So the maturity of the DeFi space is still got some ways to go. And we talk about those kind of risks. And I think, they do have the potential to kind of really set the DeFi space back. And so I think, you both have very valid points.
Well, I would just say, I was asking a question for somebody to help me out. I wasn't necessarily
No.
criticizing it. It's just something that I don't do. But just since Jonathan mentioned it, he said, like, with a mortgage-backed paper, these mortgages are backed by real estate. And if everything was done correctly the way it should have been, there should, normally the mortgage is worth, less than the real estate that's backing it. So when you have correctly done mortgage backed, even if you have, pools of it and all of that, they should, in the end, be money good. I'm not sure, what's backing all the collateral other than crypto. And so if it's like Bitcoin or Ether, it's great. If it's like the governance token of, that could be very good too, because, the only thing that determines the price is what somebody's willing to pay for it. But, we can see that, very quickly people stop being willing to pay for the most risky things out there, especially when there's nothing, backing them. And that's just what I'm more concerned about. But in the meantime, people are printing money. So
this is true. Jalak, do you have a take on this at all?
Yeah, we're not that active in the DeFi space, certainly following it, because I'm very excited about what it means and this transparency and really true markets where you can decide what your level of risk tolerance is and act on that. And I think that is the ultimate promise, and we're interested in anything that provides more equal access to investing in assets or monetizing your own assets. So I do think that we're going to look at DeFi very differently 10 years from now, and it'll be way more integrated into our existing financial system and offer different opportunities for investors. So I do. The reason we're not that active in it is and I do play around with it outside of the fund is just that I do think you have to like specialize in it, as we have some folks here that do, because there are a lot of developments in the sector and a lot of expertise around it. So where we'd be interested is the earliest stages of company creation or token creation in the sector, and so that's where we're likely to get more involved, and we're certainly looking at certain derivatives kind of software that's being developed. And so we will go really early at the creation of the entity, but in terms of actively trading and providing liquidity, we don't do that.
You actually you brought up an interesting thought there, where you kind of spoke about, I guess, the appetite or the responsibility of the individual and the appetite for their kind of risk. And I did want to, I guess, put to you guys about, I guess, responsibility around what you invest in and the education piece, because I know there's a gap at the moment between the level of education and the learning curve that people need to kind of take on when they get into the space. And then I guess the level of responsibility of the different protocols of the chains to actually kind of educate new users. And there's a lot of, do your own research, and but how much of that do you think is on the individual? How much of that is on the particular projects? And how much of that do you think investors think about when they're investing in a company? Does anybody have a take?
Yeah, sorry, I wasn't sure if it was directed at anyone. I think there's a base level of education that's incumbent on the people who are behind it, especially if they're, so there's different market types. And so sometimes you're a founder and you're in a new market, you're creating that market. In that situation, if you're not going to educate people about what you're doing, you don't have anything. It's not going to, you have to will this into creation. And this is like, the act of category design, of market creation, right? So that involves a ton of education. Where you're tackling what could be described as an existing market, I'd say it's less incumbent on the on the entrepreneurs themselves to do that education. They should have education that's more like product specific, maybe make people understand how is it different, why they should use it. But at that point, it becomes much more to the user, in a way, should be the one who is kind of like getting themselves up to speed. But in that place, right, there's a ton of materials that they can draw on. Right, in today's age, you want to find out about anything, Google's got your back, right? The Library of Alexandria is like right here. You just have to tap into it. And so that's the main difference. Now, as investors, we ought to be very educated about the things we step into. You're never going to have perfect information. That's, a recipe for wanting perfect information is a good way to be a terrible investor. But you must know what you're doing, right? Like, you sometimes will be the first line of defense for the things you invest in, right? Because a lot of times, prospective investors, well, they might not know the founder just yet. So they're coming to you with their questions. Prospective users, especially if we're talking about something that serves other networks, other businesses, you might be their first touch point. So if you're not educated about it, you're doing your companies a disservice. So that's kind of my take on it, about how it splits between, entrepreneur responsibility, investors, and users.
Awesome. So we've actually been going for quite some time. I didn't realize. So I've got quite a few more points I wanted to get to. Obviously, one of the biggest topics at the moment is NFTs, and everybody's talking about them, and we can't avoid talking about them. We won't avoid talking about them. But I want to get your opinion on why you think now has been a tipping point for NFTs. They've been around in kind of one form or another for almost 5 years. So I guess, what's each of your takes on why now? What are you looking at in the space? Do you believe in the space? And kind of what your take is on the NFT sort of universe. Anybody can start, but I'd love to hear everybody's opinion on it.
Yeah, well, I'm not an expert in NFTs, nor do I claim to have a very refined eye to curate. But having, I guess, been spending more time in NFTs, I find them interesting in the sense that, at the end of the day, they're vehicles to tokenize X, not just art. I think it starts with art, but it can expand to other instruments like insurance contracts and real estate contracts, So addressing your question directly, like, why is this time different? Talking to, I guess, a lot of artists, and like Justin Blau, like, who's been one of DJ that's like been at the forefront of this and been at it for some years. He said different than 2017, because a lot of people were thinking about this in 2017, is that really COVID has made it extremely hard for artists to monetize and engage with their audience. And so NFTs are vehicles to do that. And so that's why you see, or at least from his perspective, saying that now a lot of artists that initially were skeptical, now they want to go through the hoops of setting up a MetaMask account or cold storage and going with Foundation or some of these other platforms, super rare to engage, right? And once they're there, then they discover, well, this is interesting, right? Because it can engage with my audience directly, and the economics are much better, and then it allows you to do very interesting things with like NFTs. It's not just like a digital picture. There could be embedded a lot of logic within that NFT, and just you can, like, I get excited because I think this intersection of DeFi and NFTs, you can do a lot of different new primitives and interesting constructs to finance and commission art and to have interest bearing NFTs and like some of these other things. So I guess that's like one perspective of why you've seen, I think, a lot of interest from, at least from the supply side of there's a lot of supply. Some of it is just what I think is just garbage, but there are very high quality, artists, musicians, other just normal people that create really interesting art and get discovered in the digital context.
Yeah, I think Santi hit it spot on with just there was an environmental factor, right, an external factor that forced a lot of the interesting creators into it. Now, at the same time, also the infrastructure had been much more mature to make it much easier this time around, right? This time around, you had Zora, you had Foundation as two like very easy tools to do your minting and do your engagement. You had Super Rare, Rareable, OpenSea, as like these live marketplaces for the things once you've minted them. And what I think helped it break into mainstream culture in a way like never before is now we had real IP, right? Like I'm a huge NBA fan, and I know many huge NBA fans as well. And the incidence of Top Shots bringing you like what it might be the most interesting, valuable IP in the world, right? The NBA. And that I think is what really like that was the flashpoint moment, I guess, right? The thing that really put NFTs into just like the cultural zeitgeist is suddenly like, oh, a dunk of LeBron James is going for $50,000. The amount of people who are interested in the NBA and want a collectible from the league is far larger than, say, the ones who might have been interested in a fun game that looked like, like Tamagotchis on chain, which is 2017's CryptoKitties, right? Great that it came from the same people, but it was bringing that IP that brought a lot of that interest. And so that was the combination of both, it was easier for high quality supply to come online because of this tooling, because COVID forced them for a new way to engage with their customers. But it was the incidence of very interesting IP and of, artworks from artists that people wanted to see that brought the demand side together. And that just, converged for a very interesting 6 months of that space.
Yeah, and I think. Sorry. Go, Jalak. Go.
Yeah. So we led an investment in a company called Curio at the end of last year, and they work with larger brands to help them create NFTs out of their library of content. And I mean, just 6 months ago, they couldn't really go to these large entertainment companies and producers and talk about NFTs, and they had to explain the whole concept to them. And it's just completely changed in the last couple of months. And I think the original willingness to even engage in that conversation from the brands is because of COVID. I mean, they lost, that constant audience engagement that, if you look at retail or other brands, they had to figure out other ways to get engaged with their customers, and it was all online. And so they started thinking more creatively about their content and how they could utilize that content to keep the audience engaged. And I think that's what's resonated, it's interesting that, we've just heard comments about how it's resonated with the individual creators and artists, but it also has very much started resonating with the larger brands that, I thought it would be a much tougher sell for them. And they've really come on board very quickly.
Yeah, I think the cross pollination is really interesting. Yeah. And Mark, did you have something? Did you?
I really don't have that much to say. I don't understand myself, the art market. Just as an anecdote, I was at a friend's place a few years back, and there was a taxidermied mouse on like a pool raft, and I picked it up and said, "Oh, this is interesting." So I put that down. It's an expensive piece of artwork. I paid $150,000 for it. Now it's worth $400,000. I said, "Oh, shit! It's a dead mouse." But and so that, I'm a bit mystified. It was from a famous artist, so it's worth a lot of money. That's how it works. Yeah. And I guess the NFTs, like digital art, is not that different from my perspective. But I think NFTs themselves have, massive use cases, which we're only just scratching the surface of.
Yeah, and I think so. We're kind of edging towards the end, I think, but there were two more questions that I just wanted to get in. So, one is kind of off the back of the NFT thing, which is we're kind of seeing, I guess, talk of metaverses, right? And this is something I'm quite excited about myself. And I think because of the maturity of technology, the convergence of different elements of Web3 decentralization, we're kind of starting to see that that really take off. And I just wanted to kind of open the floor and see what your take on that is. You know, this kind of ability to live in this meta universe and really exist and do crazy things. I think it's really, really interesting. So I'd love to hear you guys talk on that.
All right, I'll go first on this one. I'll be short. I think the metaverse is an amazing, amazing concept, especially as everything becomes more digitized and we spend so much time in front of the computer. If we can interact on any kind of level and have it somewhat gamified, I think we're just going to realize what the power of that it can be. And we're working on a potential investment for the next fund in this space as well. So, you see like really, people just get engrossed and live within games. And if it becomes more like some productive, add productivity to it, then you can work sort of within this game and develop and create things of real value.
Yeah, totally agree with Mark on this. Huge proponent of the metaverse. We already live one. This is like the most basic one, just not as immersive.
So we're in one right now, right?
Yeah. If you have young kids, right, they're probably spending a lot of time either on Minecraft or Roblox. Those are like probably the most robust metaverses out there. Something like 15, 16 years ago, I spent the better part of my teenage years in World of Warcraft, where, I was convinced that very soon people like their job would be, that someone would be a blacksmith in World of Warcraft. It's a profession that hasn't happened yet, not at the scale that I thought it would, but it's going to happen this decade. And so it's just an extension of what we're doing.
I think it's natural that as we spend more time in the digital world, these metaverses become a bigger part of our identity and therefore capture a lot of value. And so I think you're seeing with Fortnite, as there are concerts there, and at this intersection of VR, it could be a pretty immersive experience, not just like pixelated, like World of Warcraft stuff. But I think it's very immersive, and just younger generations are much more, I guess, like what's to say that I think my parents are always, or just older generations are skeptical of, no, a friend needs to be a physical friend and you need to see them. And, that's what embodies a relationship with a human being. I mean, I kind of don't necessarily agree with that, but I guess we are called autists in or some sort of shades of autism in crypto by being crazy that we're into space. But I don't know, like I have, especially with COVID, I think people realize that, you can build really meaningful relationships in a digital context. And that's why I think you will see a lot of value and that, ultimately a lot of activity in these metaverses.
And actually off the back of that, Santi, and I think, you and I have been in a few conversations around this about kind of pseudonymous and anonymous kind of communications and kind of almost not having to know necessarily who that person is, but really what they stand for and what they've done, and that kind of becoming more important and kind of that being something that Web3 really accelerates. I think that's kind of an interesting thing.
Yeah, I totally agree. That's, I mean, at a more like philosophical level, one of the things that I've always found fascinating about Web3 and this open source. I mean, I was just looking at this last night. So Ethereum now has like 2,300, 2,400 like active open source developers. I think that's larger than Linux. I mean, for a network that's like 6 years old, I mean, that's fascinating. And I think one of the more rewarding things to see in this space is that, anyone, anywhere, no matter who you are, what you stand for, what you look like, if you're smart, if you have good ideas, you will be discovered. And I think you see that. And so I think like open source communities and the compounding effects of that, are going to produce some really interesting things. And so, I mean, my imagination doesn't stretch too far, but I know there are very smart people and developers because you're connecting to a a global mesh and network of really talented people that build off of each other. And so like, I mean, I guess that was the bet of Ethereum. And when it got started, you didn't really know what was going to get built. And for so many years, it was like, okay, like what is like this generalized consensus platform going to be used for? And then DeFi kind of maker, and then you had a stable unit of account, and then opened up this whole universe that you see now. But DeFi is really 2 years old, but it processes, has like 70 billion in total value locked, and it's been a lot of value created. But as Mark or Jalak mentioned, like we're scratching the surface, I think, still. But you sort of take stock that more and more people, I think, are paying attention, especially now with the Coinbase IPO is interesting because it brings so much more attention. Be like, okay, there's a lot of value to be created here. And I think smart people want to build on difficult, challenging problems, and crypto has no shortage of that. And so you're at this kind of cusp of like more and more human capital will enter the space, and you're going to be creating, I mean, just if you're not, none of this is financial advice, but if you don't believe in crypto, then you might as well short like human creativity and ingenuity, because it expresses itself best in open source networks. You know what I mean? Like you can't compete this sort of cathedral versus the Bazaar model. Like you just will not be able to compete against a force of nature of 2,500 developers that are constantly like building and off of each other. Google can't compete with that. I'm sorry.
Yeah, that's I think why we're also excited about it. And thank you, Santi, for it was obligatory. Somebody had to say it. This is not financial advice. Somebody had to say it. Thanks, Santi.
We should put that at the very front, because
yeah, we should have put that at the top, right? But I guess so. There was another, since we're still allowed to keep going. There was another question I had about, I guess, the disruption of VC, and we're seeing now, DAOs being created to provide liquidity. There was just, I think, this week, 20 million raised in a couple of days by a Neptune DAO to kind of provide liquidity to new projects and kind of skip the need for venture capital. And then, we have obviously launch pads and all kinds of things like that. So I'd love to hear your take on.
Sorry, Zia and the panel. I hate to jump in. We've let it go on 7 minutes long, and we're behind schedule. Fantastic chat. Thank you all to the panelists that joined us with that chat, and Zia for moderating.